the private credit industry has grown to over $2 trillion with firms like Apollo, KKR, Blackstone making direct loans, largely exempt from a lot of the banking safety and soundness regulations that were put in place after the 2008 financial crisis. And these funds lend to mid-sized companies. They lend to the data centers developers, and like I said before, they draw their funding from banks, but also from pension funds, from insurers, and from accredited investors, which are really wealthy investors. So the banks have extended trillions of dollars in commitments and loans to these private credit funds. So those exposures have grown really, really fast over the last few months. And meanwhile, the borrowers, companies like OpenAI, are burning through piles of cash. According to the Wall Street Journal, the OpenAI made a $12 billion loss just last quarter. And they soon will have to pay or $60 billion, I think, a year for cloud infrastructure just to Oracle. So, the problem is it's not just the loans themselves, it's who bears the risk, and where does the private credit firms are getting their money, like I said. So, soon a lot of ordinary people are gonna be on the line, and for funding potentially, really risky ventures. And the way the bubble burst, and obviously I'll let Professor Allen talk a little bit more about this because she had a really great article recently on Project Syndicate. But what we could see is just debt and contagion spreading throughout the system. We can see AI companies defaulting, which would make big losses for the private credit funds. And then the pension funds and the insurance companies would face massive losses. The banks that lend to those institutions would face defaults. Margin calls would force fire sales. Asset prices will collapse. And then suddenly we are in a full-blown, debt deflation or financial crisis. So, and like I said, regulators have very little visibility into the risks that are in these private funds. And some of that is intentional, to be honest. We are talking about a choice that regulators are doing to not guard these risks and to not, enforce rules and regulations that are already in place that could give them some of the data and some of the information they need to monitor this.